Welcome to Winning with Anna Lee. I'm your host, Anna Lee Leonard, president of Mainstay Financial Group, right on the corners of Antes and Perry. And every month, I come out and I try to educate you more and teach you things. What we want to do this month is talk about what makes the relationship between Mainstay Financial Group and Alpha Star Capital Management, because that's who we placed our licenses under. And I am so privileged today. I have with me Mr. Brooks Riley and Bob Drury, and they came all the way in from Cornelius, North Carolina. I mean, honey, what a trip. A little different, but so glad to have them here. And we're going to talk about the wonderful relationship that Alpha Star is able to offer those of us who are advisors. So this is part of our team. When you come in and you hire Mainstay, you're not hiring just me. You're not hiring just me and Megan. You're hiring a whole team of people. And that's what we're going to talk about today. So let's kind of start a little bit. Brooks, let's kind of go through a little bit of your background so everybody knows, when I say I've got these great guys that I go and I talk to, yep, they've got the credentials, doggone.
Sure. Well, believe it or not, I actually studied finance and investments in college, and I'm putting my degree to use. So I started out there. I went to New York City for about 3 years, worked for a mid-sized broker-dealer and investment bank. So I got my start there in the industry. I actually moved out to San Francisco for a couple of years I was on top of managing some of my own clients, help them develop the new broker trainee development program there. So that translated nicely into my role now with Alpha Star is as the investment advisor consultant, my main role is to help train new advisors, help them figure out and implement their financial planning process, and then furthermore, once they kind of get established, help them with their practice management and help their practice operate efficiently.
And continue to serve our client and to grow. And that's one of the reasons I made the decision to go with Alpha Star, because it's not like you just get someone set up and then say, okay, bye, hope you do a good job. You guys are always there for us and part of the team. And Bob Drury, Bob, you're part of the team. The only person in the world I know who is taking the test to be a third level CFA. Yes. Tells you something about the brain matter this gentleman has. But tell us a little bit about you, Bob, and how you got into this.
Well, I started off in the industry working with mutual funds, low-cost mutual funds through Vanguard, and learning how to design overall portfolios through those structures. And then progressed through the industry, became a financial advisor at that firm, and eventually became a CFP, Certified Financial Planner, and began to work on the Chartered Financial Analyst designation. So certainly tried to keep always learning in the financial industry. So it's very important to always be trying to become a better licensee so that we can serve our clients better.
Serve our clients better, and I tell all the young people that I work with, the day you stop learning in this industry is the day to leave. Because no one ever knows all of it. And isn't it true, Brooks? Whatever rule we've got, it stays that rule forever, right?
Absolutely, and that's
as in yesterday it changed already. Yeah,
Absolutely, that's one of the big things about the relationship between the advisor and Alpha Star is that we try to provide you with that back office support with a lot of things that I'll say an advisor, I don't say shouldn't be an expert on, but doesn't really have the time to be an expert on. So we'll take our compliance team pays attention to what is going on in the regulatory environment, and they let our advisors know how they need to be operating, what kind of documentation they need to be keeping, all that kind of thing. Our operations department deals with the custodians, so that's where the accounts are held, that's where the assets are held. So they open new accounts, follow up on transfers, all that kind of stuff. Bob on the financial planning desk provides a lot of back office support for the actual analytics and putting plans together. And we really we say we want our advisors to be that client relationship manager foremost and that high-level financial planner. So we try to take everything off of your plate that we can that doesn't focus on those activities.
Yeah, and you just go to compliance. I know a lot of people complain about compliance, and sometimes it is a pain. We all know that. But I welcome compliance because that's what keeps us as an industry where we're trying to make sure that everybody out there is doing the best that they can for the client and not for themselves, which is why we all voluntarily take on the fiduciary role.
Absolutely.
So we're sure what we're doing is the best thing for the client. So I would much rather call you guys and have put something together and say, here it is this okay, than have to sit down and write a whole compliance manual myself and put something out and hope that what I'm doing is the right thing.
Yeah, our compliance staff likes to remind us that they're compliance as an asset as opposed to as a hindrance.
That is correct. And you go home and tell them I agree, okay?
They're able to spend their time on a daily basis from a holistic firm standpoint, figuring out the best way to be compliant for 60 advisors. So 60 advisors or more do not have to go figure that out all out on their own to figure out the best way to be compliant. So
Nor
it makes
do
you more
60
efficient.
advisors have to go hire attorneys.
Absolutely.
We've got all that built in, which to me is what the advisor should be doing, is spending time building a better relationship with the client, getting to know the client better, changes that have occurred in the client's life. So then you and I sit and talk, Bob, about, okay, these changes have occurred. What change does that mean should occur in the portfolio?
Absolutely.
And
And that's how we can best help the client, really, once we truly have an opportunity to take the information that we have been able to gather compliantly. We understand the client fully from a needs and a wants perspective. Then we can begin to think about the products and services that would best service the client to get them to their goals.
Yeah, and you know, we always point that out. That's kind of the role of the fiduciary, very opposite of a lot of the people that are out there that are in the same field we're in. It's not product first and client fits the product. It's client first, and then let's go out and figure out what best serves you.
Yeah, I think that's the one thing that probably I'm most proud of in the work that we do as a team and working together, understanding our clients and making sure we're providing something that fits them as opposed to just the easiest thing to sell to make a commission.
Yeah, and that again goes back to the fiduciary rule and why we have it. And I don't think everybody understands that we voluntarily take that on. It's not someone telling us this is what you've got to do. We voluntarily take that role on, which I think makes our job in many ways harder, but much more satisfactory.
Absolutely.
Sure, absolutely. You know, I would say that, you know, as you mentioned, there is kind of two sides of it. You have the suitability and the fiduciary. Suitability means you need to meet certain qualifications in order to qualify to invest in a product. And fiduciary is, in my opinion, much more reason-based, whereas you need to make sure that you are making a recommendation that is in the best interest of the client.
Yes.
And that's where, as you mentioned before, I think a lot of the industry has become a little bit commoditized with you can get certain kinds of investments or products pretty much anywhere. It's, do you want a financial advisor who's going to talk to you, understand you, figure out your whole situation, and then on the back end you put the plan together and put the actual products in place that make sense for that specific client. So you know, obviously have very good reasons for putting each product in place for a very specific reason for that individual client.
And there's a reason. There's a reason behind what we're doing, and a lot of it, after I have met with the client, spent anywhere from an hour and a half to 3 hours with them, collecting information, understanding them. That's, Bob, when you and I really get to work together, because I send you everything.
Yeah, absolutely. I like to refer to my process as the gap. We want to fill the gap in the financial planning process for the client, and that gap refers to gathering client data, analyzing that information, and providing professional money management, and ultimately monitoring those portfolios over time to make sure they're doing what they were supposed to do in the first place.
Do what they're supposed to do. And in the other thing, you know, that I enjoy working with you so much, Bob, is that there is no slot that everybody fits in, just in different percentages. We actually, between the two of us, sit down and design a portfolio that's extremely diversified and will fit a client's risk tolerance.
Absolutely, yeah. I like to begin through that client data gathering process, understanding not only a client's risk tolerance, but also their willingness to take risk and their ability to take risk. That risk tolerance can be broken in half through those two items. And once you understand that, then, and really only then, can you get an idea of the types of products that they'll need to meet their goals. And whether it be an income need, whether it be a portfolio growth need, or even a protection need.
A protection need, very often.
So I think those are, and that's become even more important. We've recently come out with our Beta Shield portfolios, which are purely or largely based around a way to protect client portfolio assets over time while still providing an opportunity for growth.
For growth. And you know, we all know that, and that's one of the things I teach in the class, that growth bucket can be kind of shaky, but you've got to have that growth bucket to stay ahead of inflation and to make sure that your buying power 5 years, 10 years from now is the same as it is today, because without that, we can be going backward. And when we come back from break, that's something I want to talk about, is that sometimes when people get too safe, they're actually getting behind the 8 ball instead of ahead. So we're going to take a little break in just a minute. But, you know, again, it goes back to that whole idea of really knowing your client and gathering all of that information. I'll very often have people come in and say, well, why do you need to know that? Well, because without understanding you, I can't put together what you need. Well, I've never had an advisor do that. Well, because you've really never had an advisor. You've had people that like to take your money and put it somewhere, but you've never really had an advisor. So for a lot of people, it's a whole new world when they come in the door.
Sometimes we like to compare it to a doctor. You wouldn't ask a doctor to fix your knee if they weren't allowed to look at it first.
That's correct. That's correct. Tell me where it hurts, and then I'll see if I can fix it. If not, I have no idea what I'm fixing. So we're going to take a short break. We'll be back in just a minute, and we'll pick up where we left off, okay?
Great.
Good. Wonderful.
Retirement strategies come in all shapes and sizes. One strategy does not fit all when it comes to reaching your retirement goals, and considering all your options may be, well, more than you want to think about. So whether you're looking to retire or already living in retirement, you need a strategy tailor-made for you.
Hi, I'm Annalee Leonard with Mainstay Financial Group, and I'm here to design a financial plan for you and for those that you love.
Hart, what's going on?
I'm leaving.
Why? What did I do?
Not enough. You constantly ignore me. You barely eat anything healthy. You're half as active as you used to be. The pressure is just too much. I quit.
Okay, I get it. I'll do better. Just, please, don't leave.
Okay. But remember, if I go, you go.
Listen to your heart. Don't let it quit on you. Uncontrolled high blood pressure could lead to stroke, heart attack, or death. Get yours to a healthy range before it's too late.
There's a shelter pet who wants to meet you. Meet one today. Visit theshelterpetproject.org. Adopt.
Mainstay Financial Group offers advocacy and personal financial guidance in a caring environment. That's the heart of our practice. At Mainstay, we're dedicated to exemplary service and a caring relationship with our client, not with a number. Plan for the future now with Mainstay Financial Services.
Welcome to Winning with Annalee. I'm your host, Annalee Leonard, president of Mainstay Financial Group. And with me today, I have Brooks Riley and Bob Drury from Alpha Star Capital Management in Cornelius, North Carolina. Beautiful little area.
Great lakefront there, but doesn't quite compare to the water you have here.
Well, not the beach, but it's a beautiful, beautiful lake that's there. It's just a very nice area, very pretty, and I think you there call our northern people halfbacks, because they came here and the summers were too hot, so they went halfway back. Mm-hmm. So yeah, we have our names for them too. But yeah, no, come on, I'm just teasing, and you know that. So Brooks and Bob are with Alpha Store. This is part of the team that you hire when you hire Mainstay Financial Group. And one of the things I want to go back to that we kind of lightly touched on, and one of the reasons I love the affiliation with you is I've built my firm always on the basis of education. And I was told 30 years ago when I started this, don't do this. You don't want them to know what you're doing. And I said, yes, I do. I want to educate people. And I was told I'd never make it. So here we are 30 years later, and evidently something worked, okay? And you believe in the same thing. So you're constantly giving me information that I can then use to educate my client. And part of that goes back to the risk reward.
Yeah, I think oftentimes it's extremely important, really with expectation setting at the beginning of the relationship when you're putting a client into a portfolio, for them to understand why are you putting them into that portfolio, why does it fit their need, but also to understand that there's a risk reward payout with any portfolio option. And investing, anytime that you're taking on an opportunity for growth, there's probably going to be an opportunity for loss. Anytime that you're not taking on an opportunity for growth, there's an opportunity for inflation, so you may lose out there. So every decision that we make from a financial perspective, we're always taking on a risk.
We take on something, and you know, people will come in to me and say, oh, I don't want anything to do with that market. All my money's in the bank. Good. How much are you making? 0.5. What's the inflationary rate right now? 2.5? About reasonable? Yep. And then you get a 1099 at the end of the year, so you're going to pay taxes on that 0.5 that you made. So to me, that equates to a negative. Yep. So you can be too safe at the same time. But you know, we talked about this the other day, Brooks, about one of our clients that had come in and not real happy because this past quarter they haven't done real well, but they're in a very conservative portfolio, which they requested, saying, well, you know, Joe down the street's making 12%. Well,
sure, and that's a very common occurrence with the retail investor, in my opinion. That's why I think it's very important to have an advisor. Is that, you know, the role of an advisor in our structure is really to be that client educator, and there has to be a reason why they're in the portfolio that they're in.
Yes.
And it's a very, in my opinion, pretty short time frame to look at, depending, you know, if you buy an investment for a quarter, then that quarter's worth of performance is very relevant. If you are in an investment portfolio that is, you know, meant for retirement distribution, that's 15 years down the road, then that quarter really isn't that relevant. It's more about what are the growth opportunities here over the, you know, 1, 5, 10-year period, and not what happened that quarter. So it's, you know, that's really the job of the advisor, to help manage expectations, help the client understand why they're invested in this investment model or investment product, and what they can expect from that.
Yeah, and that's where, you know, I always go back and I pull the folder out and I say, now look, this is what you told me. This is the risk profile that you did, and that's what you wanted to accomplish with this money. This is the beautiful proposal that Bob and I put together for you, that you signed, and you agreed you wanted to lose no more than that. But now you're telling me you want to make 12. So that's when I've got to say, well, do you want me to go back to Bob and he'll put together a much more aggressive portfolio?
Absolutely, yeah. We have portfolios that range the full spectrum of opportunities, whether you want very conservative to very aggressive or something in between. But we have to go into it with the full expectation that Brooks often likes to tell clients, you know, we may not know what every market environment's going to give us, but we do try to understand what every model that we have and how it's going to respond to every market condition. And we try to put you into a portfolio that's going to match your portfolio needs regardless of how the markets respond.
Right. So when you say matching a portfolio to market conditions, that would be, and I know what you're talking about, but I want to make it clear to everyone. So we put someone in a portfolio, you basically, when you send it to me, you're giving me stats on how that portfolio would behave if we had another 08.
Absolutely.
If we had a high rate of inflation all of a sudden. And I think that's very important for me as an advisor to go back over that on a consistent basis.
Absolutely. We both try to take a look at your current portfolio, how it's allocated, and the risk related to that portfolio, and then try to compare it to a potential portfolio that we would put you in. We do actually try to show those from a numeric basis with a 95% success rate, how much you may lose or gain in those portfolios over any 6-month time frame.
And I love the way you said lose or gain.
Yep.
Because people like to think of the market as just gain, especially when we're having a good market. And market, I think, kind of has its own mind. And I tell people that when I teach the classes, you know, don't think Wall Street works for you. They don't. Wall Street works for Wall Street to make a profit for Wall Street. We have to build portfolios to cushion you as much as we can, but allow you to get the best gain that you can based on how much risk you want to take. And that's, to me, that's the whole name of the game.
Yeah, I think when we try to create appropriate portfolios for a client, especially for long-term expectations, for one, we have to be patient. And once we decide on a portfolio that makes sense and will get us to our goal over time, we also have to understand that one quarter isn't necessarily a good measure for a portfolio that was built for a 20-year time frame. So we're going to have ups and we're going to have downs in the markets, but generally if we stick to those portfolios over time, the markets always go up over 10 to 20 year time frame, generally speaking, over that long-term time frame. So, you know, sticking with a strategy over time, understanding why you're in that strategy, certainly helps you feel better when you do have that down quarter.
And I think avoiding, you know, what I call that knee-jerk reaction, because the TV's always blasting, the phones are always telling us something, the iPad we have in our hand. It's not having that knee-jerk when all of a sudden you hear something.
Yeah, I think there's a very common misconception, especially on the retail level, that there's some kind of secret sauce or crystal ball to investing. It gets glorified a lot in the movies and on TV and in the news. Social media recently has been a very bad proponent of get-rich-quick schemes, and
there's a lot of those.
I mean, if you're looking for financial planning, there's not too much special sauce to it. Look at your analysis. Here's what kind of risk you're willing to take and what kind of growth you need to expect, and we can fit a portfolio to likely meet those needs.
Yeah, I always smile when I turn those TV stations on, and sometimes I'll just stop to see what these experts are saying. And they've got the perfect program, which they will sell to you for a mere $400 or $500. You understand? And what I always tell people in the classes is, let's be real here. If somebody had the perfect program, they would be in the middle of the ocean somewhere by their private island in their 160-foot yacht with a full crew, sipping pina coladas or whatever, waiting to press the next button on what's going to make them the next fortune. They don't want to share it with you. How do you think they're making their money? By your $500 that you're sending them. That's exactly, because there is no perfect plan. I don't think it exists. I mean, you do all the planning. Is there a perfect one you haven't shared with me yet?
I've been hiding it in my back pocket.
Have you?
Oh yeah.
Okay,
we'll
we have to
talk about that after the next
show.
break.
All right, I'm going to find that out. But it's just, I think that's the important thing. It's the time, the patience, having a team that works with you. And part of our team is like you said, we've got our inside trader, our inside billing department. All of that makes everything so much more efficient.
It absolutely makes it great. We have an internal trading desk, and it makes it much more efficient for us to have the ability to build our portfolios not only around the models that you're getting into, but also to be able to maneuver around those assets that you want to keep rather than sell out of those portfolios.
And then sell out. And I think it makes it a lot less costly for the client.
Absolutely. So we have signal agreements with a number of different money managers. So they basically, they provide a lot of the research and analysis for the investment models, and we actually trade all the client accounts in-house. So it gives us a lot of efficiencies, as Bob mentioned. Investing new accounts, so when new assets come in, we can get that invested into a model very quickly instead of having to send it out to a third party. Distributions, a lot of our advisors work in the retirement planning space, so a lot of their clients are in the distribution phase
Yes.
of their life and are taking money out of these accounts, so we can make trades and send money out very quickly. So that creates a lot of efficiencies for our advisors and their clients.
It does. And I know where it helps me. I get on the phone with Sean, who's our trader. I get on the phone with Sean and I'll say, listen, XYZ client is going to take their required minimum distribution. We're going to take that in September, but they want an additional X amount of money. So start building that in the cash side. So when I get there, I'm just able to press a button and boom, it's done. Within a couple of days, it's in their checking account, which to me is so much better than having things floating around in the mail. I don't like checks floating around in the mail. It makes me nervous.
Absolutely.
Yeah, technology is a huge part of the industry nowadays, and a lot of people, I don't know if a lot of people are not comfortable with it, but it provides a lot. It makes really streamline the industry, so we can set up electronic fund transfers with all of our accounts, send straight to their bank accounts. Wires are obviously been around for a while, but electronic trading helps us manage thousands of different accounts in one individual model. And then, as you mentioned before, we can peel out cash for distributions that are coming up.
If they need it.
Absolutely.
And it lets me spend more time with my clients. I'm not doing all the additional paperwork, which is what I'm here for. So listen, we have not hit a whole lot of things that I want to talk about. And I know you guys have got to go in a plane and you got to come here, but come on, I got the beach. Will you come back next month so we can go through this? Do you think we can get that cleared?
Maybe be able to arrange that.
I think we can make that happen if you can get us to the beach.
I will get you to the beach if you come back next month, okay? We'll see you next month. Take care. Bye-bye.